What's up, everybody? Today we're going to talk about the latest Federal Reserve interest rate decision. The Federal Reserve yesterday lowered interest rates by 50.50%. It went from 5.5% to 5% essentially. And this means essentially that the cost of money is lower. So if you're a bond holder, this means that the interest you get paid for this is going to be less than it was before. If you owe money, this means that the interest you're going to be paying on that loan or that credit card is going to be lower as well. And this essentially means the reason the Federal Reserve decided to do this is because they determined that inflation is under control. Essentially, like we said, inflation in other videos is the cost of money. So the value of money compared to other things. So the purchasing power goes down when inflation goes up, and the purchasing power goes up when inflation goes down, because your money is depreciating. Say at this point it was depreciating at 9%, which was crazy, right? Now it's only depreciating at 2.5%, which means that the price of stuff is not increasing that much year over year. So now inflation is at 2.5%. It plummeted from 9%, which was the height of inflation in 2022, and everybody was going crazy. Groceries were getting expensive, gas was going nuts, and now it's down to 2.5%, which is kind of more a more normal range. And so the reason this matters, this interest rate cut matters, is because this will reverberate across all asset classes and your financial situation as well. Usually, lower interest rates favor speculative assets, tech stocks, and just the stock market in general. And it also favors real estate because this means that investors can finance their projects more with a cheaper rate. So mortgages, for instance, are now also inching lower. They were at 7 last few years they were at 7.7% for the 30-year mortgage. And for the 15-year mortgage, it was sitting at 7.03%. Now it's sitting at 6.9% for the 30-year mortgage, and around 5.15% for the 15-year mortgage. And so those are the 30-year and the 15-year mortgages rates at the moment. So it essentially has reverberations across all asset classes, like I mentioned, even crypto as well. You can see that crypto already started buying in anticipation to this rate cut, and usually crypto goes in waves. This is the most recent retracement, and before usually going higher, and it usually does it. It kind of contracts and then it expands and blows up really quickly. The next level we may be looking at is the 90,000 level extension from the 62,000 level. So, also the dollar reacted because when the interest rates are lower, this means that the dollar becomes a little bit weaker. Because when interest rates go high, usually that means that people in other countries move their money to the U.S. to buy treasuries, and that causes the dollar to go up, decreasing the value of other currencies. So, in expectation of this interest rate cut, the dollar has been plummeting over the past couple of days. So let me show you a little bit about the trend as well that started it all from scratch. So, it started in 2022, March 2022, when the Fed started hiking interest rates 25, 50, 75, 75. They were kind of in a rush to calm inflation down from its 9% level, which was insane. If money is increasing every year that fast, something is wrong and something needs to be done. And they did do something. They hiked interest rates, inflation went down, and now they're lowering interest rates. It's the natural cycle, the natural economic cycle. And what does this mean for you? So this means that essentially, if you want to buy a house, if you want to refinance loans, this is kind of like a good environment to start doing it. In the Federal Reserve did mention that they may lower interest rates by another 50 basis points this year. So there's definitely more to come. And this is an environment that, like I said, it's going to favor stocks. It's going to favor tech stocks. It's going to favor speculative assets. It's going to favor valuations across the board in every business, in every industry. And that's kind of like what's going to happen in a summary, in a nutshell. And I'll keep you posted with more videos. So don't forget to subscribe.